we're going to start now. I'll start by introducing our speakers. To my far left, we have Zsolt Darvas, who's a research fellow at Bruegel. To my immediate left, we have Piotr Partyga. You can't find his bio in your program, so I'm going to tell you a bit about him. He's a member of the Bank Zakladny WBK Management Board in charge of Human Resources Management Division. He's had a long and varied career, previously as an analyst and financial controller at Wroclaw, a fund manager and investment director at Kreditanstalt. And he's been involved in the development and improvement of HR management for years, including as a partner and executive search consultant in the Ward Howells Signum International Network and a founder of Aretis Consultants. To my immediate right, we have Jacek Saryusz-Wolski, a member of the European Parliament. And finally, we have Demos Ianu, a principal economist at the European Central Bank. I myself am Megan Greene. I'm a senior fellow with the Atlantic Council, and our panel is on the banking union. I'll start off by giving a bit of a background on the banking union, why we need one, why we're even talking about this. One of the initial points of a banking union was to break this feedback loop between banks and sovereigns or governments in the Eurozone. In some cases, you had the sovereigns bringing down the banks, like in Greece, where the governments lent on their banks to buy up sovereign debt, and when that sovereign debt was no longer good, the banks got into trouble. In other countries in the Eurozone, like Ireland and Spain, it went the other way around. So the banks were in trouble, and consequently, when they had to be recapitalized, all of their debt was essentially foisted onto the state balance sheet, requiring help for the state in some cases, like Ireland. Ultimately, Euro area policymakers seem to think that we needed to move towards a more optimal currency area, and that could involve a full banking, political, and fiscal union. Of those three types of union, though, a political and fiscal union were the least attractive to some Eurozone member states, namely Germany, but other core member states as well. So the banking union is the first kind of union that policymakers have really made any moves on. Agreements on steps towards a banking union are essentially what allowed Mario Draghi, the head of the European Central Bank, to step in and announce a big bond buying program, the OMT, which hasn't been used yet, but last summer it was a game changer in the Eurozone. It took a lot of stress out of the sovereign debt markets. And Mario Draghi was building a bridge to allow policymakers to take actual steps towards a banking union and eventually a political and a fiscal union. Now, what steps have actually been taken? A banking union initially involved three pillars. One is a single supervisory mechanism. Another is a resolution mechanism. And finally, we have an EU-wide deposit guarantee scheme. Now, the third of those pillars seems to have fallen off the table entirely, for now at least. It's just politically not attractive for a lot of leaders. So we've got the first two, and they've taken a lot of steps towards moving towards a single supervisory mechanism, which will be housed at the ECB. We have an upcoming Eurogroup and ECOFIN and EU summit next week and the following week, at which they will be discussing a single resolution mechanism, which is, in my view, the most difficult one to agree. Germany and France on the one hand, the ECB on the other hand, and the European Commission have all staked out different positions on all these different parts of the banking union. Germany in particular has been rowing back on its commitments last June to set up a banking union, particularly in advance of the German election. So it's really unclear what a banking union will ever actually look like. So I'd like to open it up to the speakers to talk about what they think a banking union should and will look like. The answers might not be the same. So I'll start to my far left with Zsolt, if that's right.
Yeah, thank you very much, Megan. As a way of introduction, let me add one more important factor why a banking union is needed, because you mentioned the euro crisis as the major catalyst for the banking union. Indeed, this was the case. But whenever there is an integrated financial system in a monetary area or even in a larger economic area, there's a lot of sense of centralizing banking functions. For example, in the United States, which is a federal country, there are no separate bank resolution authority for, let's say, Nevada or Alaska, but all of these functions are at the federal level. And I think it has also been recognized by more and more people, and this gives, I think, another major reason why we should progress with the banking union. Now, on the question how it should look like and how it will likely look like, unfortunately, as you were right, it's not fully coincide. I mean, you listed the major elements of the banking union, which in principle should be put in place. Now, if there is a single supervisor, and that supervisor makes a mistake, for example, by not recognizing that the bank is risky and that bank has to be resolved, then certainly it should not be the job of the national authorities, but it's much more logical to have a supranational body also for resolving those banks. And while a lot of talks about bailing in the private creditors and the shareholders of the banks, we cannot exclude that public money would be needed. And if and when public money would be needed, again, if the European Central Bank will make a mistake, then it should not be, let's say, the Estonian government or the Polish government, if one choice, who should foot the bill, but instead of the bill should be footed by a supranational resolution fund. Now, so the desirable elements, I think, is quite clear that all of the functions should be centralized, and also, I mean, other measures, for example, bank taxes also should be at least harmonized, because if there are many larger different taxes in different countries, then that can tilt the playing field. Now, this is the ideal. Now, how it will likely look like. Now, we know that in Europe, nothing is possible without Germany. I mean, since Mr. Schäuble said very, very clearly that they see very major legal issues with the supranational resolution authority, if it's based on the current treaty on the European Union, and instead he and also Mr. Hollande prefers a network of national resolution authorities, most likely this will be, I mean, the actual outcome. I know the ECB has a different opinion, and I think I have a lot of sympathy with the ECB position. But I think in the short term, the most likely outcome will be indeed a kind of network of national systems. Then let's say in 5 years from now, if we are successful, there will be a change in the treaty on the European Union, which will form a better legal basis for the resolution authority. And quite importantly, also there will be a need a European insolvency regime as well. And after that, we can move toward a more federalist approach in these regards as well. So let me stop here.
Great, thank you. Would you mind going next, Peter? Yeah.
Well, my role probably is to give you a feedback from the forefront of the changes which are already happening, which means for the time being it's only supervision which is actually being developed European-wide. And actually in my daily work I'm already meeting the first consequences of this, that the European supervision is a little starting to be divided between our national supervision and the supervision which comes from Europe. Our bank, which is the third largest bank in Poland, called Bank Zachodni WBK, is owned by a very, very big Spanish bank called Santander. As you know, the Spanish regulator now must be quite keen on doing the things right European way. So the practical consequences that we see of this gradual movement, which you said about, is that we are put more and more into the situation that following the interpretation of the local authorities, of the local regulator and the European one expressed by our owner is more and more difficult. I can especially imagine then for the countries like our, Poland, but not only Poland, even Eurozone members who are more, let's say, emerging market economies, all of them slightly would like to have, for example, more ambitious credit policy, which means that we probably would be keen to take on more risk than it is for the time being accepted in the European Union as the best standard. That's why it is really a challenge, I would say, for us in the daily interpretation of those, let's say, rules coming from our owner and from ourselves. So my sort of encouragement would be in this discussion to say, please, European regulators, already the supervision role, and we are not speaking about any other of the beautiful roles in the future. Please remember that even if this role, this is already becoming complicated, and the interest and of different countries, not only Eurozone and non-Eurozone, but even inside Eurozone countries, are so much different that it's a harmonization and one voice of the regulator is really sooner or later badly needed.
Thank you for your contribution. Jacek, Saryusz-Wolski, can we hear from you next?
Thank you. Some say let's do it, and that's, I mean, banking union, and that will be the message of the forthcoming council in June. I would say let's do it properly. So trying to be slightly provocative, why banking union is not needed, contrary to what my Hungarian friend said, in Eurozone restricted format. We have one single market, we have one financial market, and we have one banking space. I'll concentrate not on the banking union inside, but on the future of economic integration, which is the second part of the title. It is a core project for the Eurozone. I know that we have another session on Eurozone itself, but when we speak banking union, we in fact speak about Eurozone to a great extent. And this core project of Eurozone should not continue under present circumstances. It should be corrected. If not corrected, which means becoming inclusive and EU-wide, it will cause collateral damage effect to the project, if not properly or in a changed way designed. It may have perverse effect on economic integration future and cause negative spillovers. The first pillar, which is single supervisory mechanism, is designed in a satisfactory way to the extent to which it could have been. It means being open to the non-Eurozone members. But separate Eurozone structures linked to the banking union are emerging, and that is already worrying. First, there are proposals to have a separate Eurozone budget. Second, there are proposals to have separate institutions, separate summits, separate ministerial councils, separate committee in the Parliament, which is in breach of the European Union treaties, which may be brought to the European Court of Justice. It calls also for the own resources under the form, maybe, of financial transaction tax. There are calls for separate Eurozone external representation. What does it mean? Split of internal market and split of European Union institutions. An additional question which one has to ask next day after the first sitting of the Karlsruhe Constitutional Court about European Banking Union, is it constitutional to bestow competences not on the European Union institutions, but on some strange new emerging institutions? I would be very curious what Karlsruhe would say on that, and perhaps other constitutions might also ask the question. So it's good that SSM is open, but the perspective is much less promising in terms of the second and third pillar, which is the deposit guarantee scheme, which is the further away, and the single resolution mechanism. First, there are difficulties, as you know, but it looks like that those two pillars, which should succeed if the whole project has to be successful, will not be open to the extent or at all as it would be necessary. For example, ESM as a funds to allow for the resolution, winding up or recovery of banks. Either the need would be to admit non-Eurozone members. I would even say that those 9 are not non-Eurozone. They are Eurozone with a temporary derogation. And Mr. Pietras, who is sitting in front of us, he would confirm that we are members with a temporary derogation as we, entering the Union, have been members of every single policy, but with a temporary derogation. So where is the logic on separating the two? Then there are some banking issues which I asked already my colleague from the banking sector. Would not there be a danger of shifts of deposits from less safe to more safe banks? So there are contentious issues ahead of us. The decision-making is dominated by the Eurozone countries, present Eurozone countries, in spite of the fact that non-Eurozone countries macroeconomically are in a much better shape. There is unclear access to the forthcoming guarantee scheme and resolution mechanism. So to conclude, single market, which means Eurozone versus banking union, shows us that it is more important to preserve and not to damage the single market and single banking space than this currency-restricted architecture being built, and what will be the collateral damage done. It is not the crisis, as we know, of the currency, but it is the crisis of excessive indebtedness of the banks and sovereigns. Crisis is EU-wide and not Eurozone-wide. So why this logic limited to Eurozone? I'm asking the question again, and pointing out the danger is of splitting us into two unions, deep Eurozone and outer circle, which means disintegration. We ask about perspectives of economic integration. So I'm saying that if not properly designed and implemented, that it will disintegrate economic integration project in this wider scale. And further on, it will cause the political split. So if banking union is not extended to all except opt-outs, it will endanger the further economic integration projects. So banking union is good because it's deeper, but it's bad if it is exclusive, and we should remedy that. Thank you.
Thank you. Demos.
Yes, good afternoon. I think I've been covered, so I don't need to say much. I know. Maybe I should start with the last question or last issue that was raised by the honourable member of Parliament. I totally agree that we need to avoid separation as we go forward with the banking union. But let us take a step back to see where we started from. And where we started from was a response to the crisis that has involved both the euro area per se and the whole European Union. People forget, for example, that when the crisis erupted in sovereign debt markets in 2010, we had a response that was both EU-wide. There was a setup of the EFSM as opposed to the FSF or the ESM later on. And of course, a lot of other measures that of course were more relevant for the currency union. But I think the effort throughout the crisis has been to maintain a singularity of the union to the extent possible, and coming to the banking union in particular and the single supervisory mechanism. This, of course, has been set up in such a way that allows any non-euro area member state to join the mechanism. So I think there has been, by necessity, some say, others say by design, an effort to move ahead with necessary steps for the integration of the euro area and the European Union. But I don't think there has been any intention here to leave anybody behind. So, having said that, deepening is essential. I mean, we've seen this in the crisis. Deepening under 4 pillars. Megan, I think you forgot the economic union pillar, which I don't consider at all unimportant. When we say economic union, of course, we have economic and monetary union, and now we're talking about 4 pillars below that, so to speak, to complete the architecture of economic and monetary union. essentially what we're talking about also is about economic policies, fiscal policies, financial policies. Financial policies being perhaps closer and most linked to the crisis and the sovereign debt loop have come first. They have been perhaps the most necessary in terms of timing. But there are also the other elements which we will come to, I suppose. So I leave that aside. What is essential is when you start moving, and what we have learned from the last 10 to 20 years of European integration, is that, of course, we need to get the solutions right. And when I say right, I mean with the appropriate depth. What we saw, perhaps, with economic and monetary union during the crisis is that while monetary policy has been completely centralized and federalized, other policies that are essential for the, or very important, let's say, for the functioning, the good functioning of economic and monetary union have been left behind. So I also agree very much with the idea that we need deep solutions. And what does that mean in the case of the banking union? It means, for example, making the supervision, have the supervision at the central level, and with the ability to take all necessary measures like any national supervisor could do, let's say, or has been doing until now. So it is essential that we provide the single supervisory mechanism, and this has been done, by the way. The agreement has been reached. It's a question of adopting now the legal acts by the European Parliament, among others, well, co-deciding with the Council of Ministers. So it is essential that that the tools, the necessary tools to do the job right, are obtained. I think this has been achieved, as I say, with a single supervisory mechanism. And now, of course, moving forward with the other elements of banking union, the resolution mechanism, we're expecting the Commission to come up with a proposal. It is very important also that this is ambitious because, again, what we saw, for example, with supervision was at least 3 stages to where we got to eventually today, starting in the early 2000s with the 3 committees that eventually became agencies, and now we have gone to a federalized, or if you want, a single solution for supervision. So what I'm trying to say is that we can, of course, try solutions that seem to be more comfortable at the national context. But at the end of the day, we need to ask ourselves whether the solutions are effective. And these are not things where you can go wrong too many times, because they do, wrong solutions can bring about collateral damage, as was mentioned. I'll stop there.
Okay, thank you. Let me take advantage of my position as moderator to bounce something straight back to you, Demos, actually off the back of what you just said about the banking union needing to be effective. And when I started off, I said one of the points was to break the loop between sovereigns and banks. As you envision a banking union developing, do you think that loop will be broken?
Well, I think we have already seen some let's say, reduction in the fragmentation of financial markets. It is not enough. Fragmentation is still there, and parts of the monetary union are suffering from this. But already the announcement of the 4 presidents to have a vision, a clear vision for the future. Already the fact that political agreement has been reached for the SSM. Already the fact that we are going to have what I think might be a good proposal from the Commission on the resolution, and the fact that we have CRD4 now in place or will be adopted soon. The fact that a bank recovery and resolution directive is in the cards and should be completed within this year. The fact that we have a directive on deposit guarantee schemes. we can see there's a lot of the toolkit is being developed. So and it is being developed by historical standards at an extremely fast pace. So I think it remains to be seen where the resolution approach will end up. But I think that like with the SSM, let me remind you that at the beginning of the discussion on the SSM, there were all sorts of ideas of a very loose cooperation again and things like that. There was even the astonishing a remark by somebody who was saying that we could set up a European supervisor without it having the ability to withdraw a banking license. I mean, so and eventually I think the political leaders, the policymakers, Council, Parliament have delivered. So my expectation is that this will happen again.
Okay, thanks. Zsolt, did you have something in response?
May I just reflect on some what has been said? Now, one on the breaking the loop between banks and sovereigns. I mean, what we see is an extreme reluctance for cross-border transfers. So even though in principle there was an agreement that the ESM, the European Stability Mechanism, could be used after the SSM came into operation, it can be used to recapitalize banks directly. We see a major reluctance, and even before, now toward the end of the year, national supervisors have to do a stress test on their own, and they have to recapitalize the banks on their own. After that, the European Central Bank, before accepting the banks under its supervision, will do also another round of stress tests jointly with the EBA, and if and if it will be found that some banks have very weak capital base, then again, it will be the national authorities that will have to do the recapitalization. So in its current form, the banking union in itself does not do much in the coming years to break this link. But it will help to break the link in another sense, because if, let's say, after Spain has recapitalized all the banks and the ECB issued the justification that yes, now all Spanish banks are sound, if everybody will know that after that point, the ECB will be a very tough supervisor, and after that point there will be no need for any further public debt recapitalization from Spain. Indirectly, this could lead to an increased confidence. But in the near term, I think in the coming years, in the coming year, I would say this loop will not be broken.
My colleague from the panel from the bank, which is stretched between Poland and Spain, because it's WBK, and Santander, which means Eurozone and non-Eurozone, has shown that problems are real. I tried to show that there are problems ahead of us which are not properly addressed. When the SSM was designed, I wrote a text paraphrasing the no taxation without representation principle, saying no supervision without representation. And in SSM, we have found kind of a solution, not perfect, but close. But you can add, while saying no supervision without representation, no supervision without funding. And ESM is not meant to cover. So if those banks would be supervised but not covered by funding, that's a dysfunctional construction. You said, and I feel obliged to react, because I come from the world of politics. Perhaps from Frankfurt, you don't see it. You say there's no intention to harm or to divide. Yes, there is. There's a clear part of the political scene of Europe who wants to go back to the Europe of Charlemagne, Charles the Great, to construct a separate, smaller union. And this is a clear geopolitical project, minority for the moment, but it is. So this temptation is behind. Banking union without non-Eurozone is dysfunctional. It will not help, it may harm, as I said. But there's another aspect. Somebody has raised the issue of breaking this vicious circle of linkage between sovereigns and banks. But what in place? Nobody says it openly, but let's say it. New sovereign is European Union. New sovereign being born is European Union, who will take upon its shoulders this responsibility to heal the wounds of inefficient banking system. But every sovereign, according to the principles of democracy in our union, has to be democratically controlled and has to be equipped with democratic legitimacy. Is the system of European Central Bank democratically and legitimately controlled? There's a problem, yes, I knew that you will nod, but you know, I mean, I'm coming from Strasbourg. There's a report on EMU democratic legitimacy. There's no contradiction between independence of the bank, we're all in the Parliament for that, at the same time democratic legitimacy in the areas where you do the function which was not initially meant to be yours. You know, it was not from the beginning the function to be done by European Central Bank. There were other ideas. Finally, it landed in Frankfurt. But this process, banking union, has to be democratically legitimate, which means it should be subordinated to the new sovereign, which is European Parliament. And when I hear about economic government, to go straight, when I listen and read Merkel-Hollande proposal to have economic government, I'm saying, looking at Mrs. Sinowiec from the European Commission, we have economic government of Europe, and this is European Commission. We don't need any other, and any other would be unconstitutional. So let's look on this wider prospect. Thank you.
Can I just jump in with a quick question for you, actually, because I've myself used this phrase, no taxation without representation, with respect to a banking union. And there is a big democratic deficit in the EU. I live in the UK, you live in Poland, so I understand, you know, the concerns, the concerns about a two-tier Europe. Is there an institution in the EU in which you think a banking union should be embedded so that there is some kind of democratic process or a political union, essentially, alongside the banking union? And would it be the one you come from, by chance?
I think I was clear. Perhaps it is not the view shared by Karlsruhe Court or by Bundestag. Sometimes they think they are the supreme authority of the European Union. It's half joke, half serious. But look on the proceedings of the Karlsruhe Court until September, and read what was yesterday there for the first meeting. But yes, it has to be European Parliament. There's no other choice. And it has to be all of it, which means no apartheid within European Parliament by a separate committee for Eurozone. And I mean, even before there was an idea to have a separate Parliament for the Eurozone. Separate commission, why not? Or two clusters within the commission for Eurozone commissioners and non-Eurozone commissioners. I mean, and then let's recreate the divide of Europe. I mean, there is a danger at the end of the horizon, and in order to avoid, let's really understand where it goes, because this danger is on the level of the WBK Bank / Santander, but also on the level of the future of Europe, which is also in the title. It's not. I'm recalling it is banking union and the future of economic integration. Not only banking union itself. If we limit ourselves to the very construction of, one day we'll wake up with a banking union, Eurozone hopefully saved, but without European Union. Or with European Union deprived of the content, or re-emerging division of Europe. Because from economics, it's a short way to politics. Thank you.
Thanks. Okay, Peter, I'd like to respond, and then I'd like to open it up to the crowd.
So just a very, again, practical comment. I would say that from our perspective, it's all about prevention. So there is no good of banking union in itself. It doesn't bring any wealth. It's only bring troubles as it goes, because it's a lot of regulatory. So we all need to understand that from the, let's say, local Polish perspective, all of this discussion is a little bit about the possible danger in the future that we in Europe can avoid, and us as well. But we haven't seen this danger, and Poland has not had any problem, and we are happy with local regulator, and everything went well, and it's still going well. So if we are to discuss European banking union, it's a very nice thing to have, and probably a must be for the Eurozone countries as a logical consequences of a monetary mechanism. But still, let us sort of start from the very beginning. It is not about this crisis. It's about a possible future crisis. This crisis is possibly over. As a banking person, I can sort of tell you that in our perception, we are just bottoming, yes, bottoming out. So it's sooner or later, all of the Europe will gradually climb out of this. So whatever we do now, and whatever we are doing, please also always remember that a construction for the future crisis, not this one, future crisis, should always consider that regulation, which our industry is very much used to, and we will soon be like, you know, energy sector or something like this, which means that soon the state will set the salaries of our presidents, yes, of the banks. So it's just more and more regulation coming into this sector, and of course the consequences will be always who has the power, if there's a power regulator, and then being, let's say, local and global bank at the same time, I just want to have, as we used to say in Poland, don't have to choose between mommy and the daddy. Sort of, we just need a consistent regulator to talk to, because the regulations more will come. So prevention, yes, there is no hurry from bank perspective. It's all about a possible future. If we as the board member fail in our job, there will be needed support from the sovereign, but for the time being, thanks God, in let's say, half of the Europe, there was not such need so far.
Thank you. Zsolt, would you like to respond quickly, and then we'll open it up?
Just some very small comments to Mr. Saryusz-Wolski, because he started that he will be very provocative, and he was indeed. But let me tell that why I have a number of agreements with you, I have very fundamental disagreements as well. I mean, on the agreement side, I very much agree that a divide within the European Union would be really a major threat, and would be really dangerous. But I mean, if you take aside of these fiscal issues and other issues, and we focus on the banking union, then I have a lot of disagreements with you, because you said that, I mean, it would cause collateral damage, perverse effects on economic integration, negative spillovers, even destroy the single market. And I mean, I don't know why you think that. Let me tell you why I disagree. I mean, I think it would even strengthen the single market, because for banking union countries, those that join also outside the euro area, there will be a single supervisor. All regulatory practices, including the micro-potential practices, will be quite harmonized. And I mean, all countries have the choice to join. I mean, it was the UK's decision not to join, and that's why it became a Eurozone Plus formation and not an EU formation. But if you don't progress with the banking union, then the natural conclusion is that the euro area should be dismantled. And if that would happen, then there would be a major economic crisis, which I think would have also destabilized the European Union itself. So either you accept that, yes, some countries decided to share a common currency, and the crisis and the pre-crisis period indicated that the previous architecture of the single currency was far insufficient, and much more is needed there. And therefore, you go for high-level integration in certain areas and open for other countries to join, or you draw the other conclusion that this euro area project doesn't work, we should dismantle it, and let's hope the EU will stay together.
Thank you. Does anybody have any questions for our speakers? Too many. Sure, we'll start here.
Okay, just to, I wouldn't reach the level of provocation of Jacek, knowing him for many years. But I'm Saryusz Najar, since I'm in Polish banking for 20 years. I have two questions to all of you, in fact. Okay, just to be honest, I'm with Santander Consumer Bank Supervisory Board. So I belong to the same family, but not directly, so far. My first question is the perspective which is missing in our debate is the perspective of the consumer, of the customer of the bank. We are talking about the deficit of democracy, but imagine the deficit the banking consumers, the banking customers are going to feel with a distant supervision, with a distant mechanisms, with a bit abstract, very complex euro, non-euro mechanism, how to address their concerns. Because finally, I know what is supervision on the national level. I was living with this supervision for 20 years, and I know how difficult it is to make the customer comfortable, to feel secure, to feel well informed, to feel protected, and to understand the complexity of the banking services. So how to protect the banking customer, which should get in from the new supervision from European Central Bank, for example, all necessary support to feel protected as a special regulated sector customer, because not by chance this sector is specially regulated, especially controlled and secured. So who should address these problems? Having in mind 28 member countries, complexity of languages, complexity of cultures, complexity of communication mechanisms, so on and so forth. So probably a big network, I'm trying to answer this question, a big network of customer protection offices, many I don't know, attorneys, many how the name of the civil right, the ombudsmen, many ombudsmen working on what level. So I'm putting this question about provocative, but we cannot just talk about the industry. And surprisingly, I am from the industry, but I should understand the other side of the coin. And my second question is about the very supervision, because the supervision is efficient with some empowerment. For example, to become the president of a Polish bank. Where is the president of a Polish bank? There is one president of a Polish bank. Where is Arek? Arek, where are you? Oh, he left. Sorry, then he left. Sorry, I saw him at the beginning. You have to go through a very sophisticated process of being approved. You have to be approved by supervision. The supervision can't really take over a bank, can really intervene, can really impose certain sanctions. There are some legal basis for it. So what's going to be the legal basis for the supervision, and what's going to be the real power of a supervision on the European level? And I agree totally with my friend, not just because he belongs to the same family, but we haven't met that so far, but because this is the real essence. If there will be no power of the supervision, this is just pure bureaucracy. This is just blah, blah. It is not going to work. It's not going to be really the supervision we are thinking in from Spanish, German, Polish, Swedish perspective. So this is my second question. How to empower the supervision to be really able to impose certain rules on banks without legal background? Thank you.
Thanks. Damos, do you by any chance want to answer about supervision, since you'll be sitting with all of them?
Well, I'm glad I brought this with me. I mean, because usually people complain about bureaucracy, the bureaucracy of Brussels, but this is all in here, and your answer is in here. This is the regulation that will... Yes, okay, it's the council version. It's, it's very good. Well, it's like, but okay, it's here, but I don't understand the question, because you're saying we need empowerment. I mean, I'm trying to understand. Maybe I've misunderstood the debate here, but we're talking about unifying a system that was fragmented. And because it was fragmented, it was one of the reasons why we went into a crisis. And sorry? As a Euro area, let's say, technocrat, I should not speak about specific member states, but I recall it back in 2010 when some people raised their hands and said, not in my country, not in my country. A year later, 2 years later, a lot of things happened. Of course, and I'm glad not in Poland. I'm very glad, and the Polish economy has indeed performed very well during this crisis. However, if we always go through the channel of I don't have a problem now, but may have a problem later or had it before, then with 27, 28 member states, we will probably wouldn't agree on doing anything. But we have seen that, for example, in banking union, you talk about the single market. To me, when I started dealing with this dossier, I was in a way astonished that one could speak of a single market and actually ignore the public policy side of this single market. So we wanted to have, you know, we have capital, you know, free capital movement, you know, the single market, you know, financial products coming in, going out, even from outside the European Union in some cases. And we had no unified way of addressing problems. And then we start talking about a single market. I mean, it's like saying, you know, in Poland we have a single market for you know, for capital movements around Poland, but the supervisor in the case of banks is only responsible for Wroclaw or Warsaw, I don't know. I mean, this is a unified space in terms of markets. How can it not be unified in terms of public policy? So, and if you tell me now that we had 28 you know, regimes, and now we're unifying these regimes to at least you know, 11, let's say, and with a potential, because as was mentioned before, there is a commitment by almost all member states to also adopt the euro at some point, and I don't go into that, but just to say that this is the framework that we have, and which is an EU-wide framework, and we talk about derogations when we talk about you know, member states not belonging to the monetary union and so on. So the point is, how can we say that the previous state of the world was less complex than the one we are entering now? Of course, it's a new state of the world. It requires change, but the change, as I said before, in terms of empowerment, you say supervision. I think the tools there are there now to do what is necessary. So it's a bit surprising. Legal basis 127.6. I think that is a sound basis for what is being done. Customer protection remains at the national level. That's an issue one can discuss. So, yeah, maybe.
Mr. Saryusz-Wolski.
If I may, I'm grateful for two things to the ECB sitting on the right. First, that you acknowledge that we have one financial market space and one banking space all over Europe, and that needs one policy. If so, you substantiate my message that we should cover all of Union with this regulatory perspective. But at the same time, you said, and which is probably the only reason for restricting banking union to the Eurozone, it's easier. You said it's easier. It would be much more difficult if you had to agree on all those things among 27, or 25, not 17. There's no other logical reason to restrict it, because the single banking space, single financial markets space is one and not two. And that helps me to counter the arguments of Bruegel. Because what you say, the present design is fine, and if there's no this design implemented, there will be a catastrophe. What I am saying is that the present design so far is fine, SSM, but if other two pillars do not follow the same design, which means being inclusive for non-Eurozone, it will be harmful. And you don't want to take that into account. So it's, we're not disagreeing, in fact. The problem is that you do not see the negative, the dangers of the negative sides of it. On one thing, I don't know whether you really meant it, but ailing banks, which means banks with bad credits, are not because they are in the euro currency. They're just bad banks. And you had bad banks in Latvia. You have bad banks, and you should know about it, in Hungary, which on their own forces, through very brutal and healthy policies, got up without any help. So it is not the currency which is behind. It is just easy to do it without the currency club. But ailing banks is the problem for all of Union. You say single market will not suffer. I mean, you must know all those reports and all those renowned economists who say that it is already cracking. It is already cracking. The protectionist temptations will be born and will be put into motion if we have those two regulatory spheres. So as I said, SSM is fine, but the next steps, which means guarantee, which will be the third probably, but resolution mechanism should be also as inclusive as the first one. But for the moment, it is not on the screen. It is not on the horizon. So we cannot have supervision without representation. We have solved it. We cannot have supervision without funding. And then we cannot have all the three pillars without representation. And for that, we have, I know all the difficulties. The statute of the ECB has to be changed. It is not adjusted to the situation. And the statute of ESM has to be changed in order to allow for all member states to have access to. But these two statutes are just wrong because they were created when there was nobody knew what would be needed. I know all the arguments that we do not want to, some say we need treaty change, we don't need treaty. I don't want to enter into the legalistic arguments. But the statutes of the two organisms created when the things were not even imaginable are not fit for the purpose. So those two statutes have to be changed, and then we'll have one regulatory space all over Union, perhaps except those who will quit, like Brits, because Danes will join. Thank you.
We have a quick question, very quick.
Thank you, sure.
Just very quick. I think we agree in almost everything. Because you said that the SSM is fine, and the other elements of the banking union should be similarly open as the SSM. But the declaration by the European Council, not Euro ministers, European Council last December, said that the SRM, so the single resolution mechanism, will be designed for the countries which are in the SSM. So if a country will enter the SSM, it is supposed to also enter the SRM. And I very much agree with you that, I mean, the statutes of the ECB has to be changed. Mr. Schauble said in his op-ed in Financial Times a month ago that the treaty, European treaty, should be changed because the ECB statute is basically entering in the treaty. Exactly one reason what he said is that to put non-euro area member state on the exact same footing in the decision-making process of the single supervisor as euro area countries. So there is a political intention to change the treaty, to change the SSM statute, and I very much agree with you that the ESM should also be changed, and I see no reason why it cannot be changed later.
And Director General of the Council listens to us, which is optimistic.
Thank you. Can we get another question from the crowd? How about right down front here? Do we have a microphone? Great.
Hopefully this is far more brief and straightforward. We've spoken about banking union and kind of the future of this from obviously the legal perspective, the economic perspective, political perspective. I just wanted to ask, and I think this is for maybe for WBK and then also for the central bank itself, are there any technical challenges? I mean, looking at this from an operational, technological, infrastructural level, I mean, I don't know that, hopefully, I'm trying to sort out the right words here, but does that change on the basis of what ultimately ends up happening with the politics? Thanks.
Thanks. Peter, do you want to address first?
Okay, I could see two challenges. First of all, I can hardly imagine as a bank, and it's also a little bit to the Polish politician, that we now have European supervisory. It is so complicated business in reality, and you need to so much interpret the decisions of the regulator towards the bank, because we are so heavily regulated, that you really require local insight. And knowing European Union for, let's say, experience as we all do, we know that it's not going to work. But that's, of course, personal opinion, that we will have, that we as the bank would relate to the European supervisory. I cannot imagine we're going to be killed, because it will be so tough for them to then to do 100 exceptions, which our bank will ask for, and another 77 with another bank will ask for, because it's in reality so complicated. So the local supervisory is absolutely sort of vital part of the present dialogue. And all of you just discussed this as something sort of almost done. You discuss the scope of this, but from the point of view of, let's say, practical, it's really difficult to imagine. That's first. So another technical dimension is what it means for the time being, because it is both a customer perspective who is afraid who guarantees actually his deposit. And it is true, and I agree with your voice, that if we are not clever in communicating all of this, and we are not, sooner or later people will start to be afraid who's really in charge. Is it state, local sovereignty, or is it European Union? And because we'll discuss for many years now, because there is no big hurry, as I said, in my opinion, except for the political pressure, but it's not enough, probably, to get it through, so the people will get more and more confused. So in the practical terms, we of course already now see, and that's why I'm here, because in my area, this is the first area which is becoming now regulated more heavily than the others. So I already see regulations coming in which puts us in this is difficult situation, that if I want to comply to both European and the local, and then I'm sort of putting, for example, my friends into very bad position. So there is a trick you can play with the Europeans. There is a trick you can play with the locals and do the deal. But you cannot do, let's say, the good deal for you as the bank with both of them simultaneously. So I know that you speak about the ideal future, whether this should be like this or like that. But before we get there, we probably get into a lot of troubles, and it can even spoil the good ideas that you stand behind. Except of this, I hope there will be no, there are some, let's say, for example, IT investments needed in all the banks in Europe. Because of this, there will be a lot of regulatory which, for example, European regulatory thinks it's necessary. The Polish regulator so far didn't think so. But because we are now, let's say, as a part of Santander, meet the European regulator, we already start to invest in the reporting solutions, which otherwise wouldn't. But that's okay. It's not a problem for us. But of course, we in Europe must simply understand that reporting supervisory of such a complex industry as we are, in my private opinion, it would be much better if we have decentralized partners to talk to, whether they agree with the European and how they agree with the Europeans, not for me to decide, but please leave us Polish regulatory and now in relationship with our bank.
Just to jump in really quickly, I mean, it's my understanding that some banks have to deal with other supervisors that aren't even in Europe. So Santander has not only the SSM and the Spanish supervisor, but also the Brazilian supervisor to deal with. So that squeezes banks quite a lot as well. You had a quick answer. We only have 5 minutes, so a quick answer, and then Demos, we need to hear from you quickly as well.
The bankers have the right to fear, and we, the sovereign, have the right to press you and to control you. The answer is subsidiarity, a concept which we have in the treaty. My colleague on the right knows that there is not only ECB, but there's an ECB system. And you know that at the end of the road, there is only systemic banks which are covered by the... I think that there can be a regulatory system which is composed of the central supervision situated in the ECB, cooperating with still existing, not liquidated, having specialized know-how and field know-how as you request. So don't fear, you will have 2 supervisors, not 1.
That's what I'm afraid.
I think that's the fear, yeah. Let's hear from you, Demos.
Well, no, I think I was going to say you have fully covered me, and then you came up with the last sentence, because let us be clear, like with monetary policy, this is not the ECB that is going to replace national competent authorities, national supervisors. This is a system in the same way that the central banks have become a system, a European system of central banks as it's called, the Euro system. In the same way, we will have a system. The national competent authorities remain your partners. Well, in the case of non-participating member states, in any case. But so we have that. So let's be clear. I mean, because there's this idea that suddenly everybody will be supervised by, say, I don't know, 500 or 1,000 people from Frankfurt, and all the national supervisors will disappear from one day to the next. This is not how the European system of central banks works. This is not how the single supervisory mechanism would work. So there is a degree of centralization. What should not be there, and what has caused problems in the past, severe problems in the past, and is part unfortunately of the crisis story, is the fact that there was no communication and no relation in the past across borders in terms of public policy, or not adequate one. By the way, we are talking here about supervision. Regulation continues to be handled by the EBA and by the European Parliament and Council, passing legislation which applies for the whole of the European Union. This is regulation, and regulation binds every competent authority, every supervisor, including the single supervisory mechanism. So that's also a very important separation. Regulation is set at the European level by the legislators. And on supervision, the idea is to have a single rule book of supervision so that indeed these problems are surmounted. Technical challenges, many. This is not an easy task. This is a rather complicated task, I agree with you, but none of them are, in my view, insurmountable. That's basically it.
Okay.
Maybe I should, sorry, I beg your pardon, changing the Ecb statute. Think about the crisis and think about how effectively the crisis has been handled or not handled. I don't think it's the right answer. If your conclusion from the crisis is that you should change the mandate of the central bank, I think the statute, you say?
The statute,
yes,
to correctly incorporate the supervision, a separate decision-making body in which
right. You only want to change that, but nothing else. Okay, all right. Okay.
No, you will continue to be a Bundesbank.
All right. Thank you. Thank you to all of our speakers. Thanks to you as well for your questions and attention. Your buses are all upstairs waiting to take you back to your hotels.